Early in the morning on Tuesday, July 21st, 2020, the FBI raided a farm in rural Ohio.
Federal agents arrest one of the most powerful men in Ohio.
The FBI agents searched the home and arrested Larry Householder, the Speaker of the Ohio House of Representatives. They charged him with racketeering by orchestrating a $60 million bribery scheme involving the electric utility First Energy. In exchange for millions of dollars, the conspirators helped pass an energy bill that would increase rates paid by customers and increase profits for the utility. But why would utilities risk reputational damage and potential prison time to do this? To understand this, we need to understand the business of electric utilities and the profitable business of bribing politicians. For those of you who may not know, electric utilities are in the business of generating, distributing, and transmitting electricity. But for some, they are really in the business of politics. And it makes sense. The large publicly traded electric utilities are highly regulated at the state level, meaning that they benefit from having good relations with the elected officials that oversee them. And the reward for having these good relations is pretty obvious. It means a lot of profits for the company and the chief executives that run those companies too. The profitable business of bribing politicians seems to be an awesome business to be in, unless you get caught, of course. Other scandals include utilities in Illinois. The electric utility Commonwealth Edison admitted in 2020 to bribing elected officials in exchange for electricity rate increases. This was bad for customers, but good for the utilities. And in Michigan, the state's largest utility, Consumers Energy, gave more than $43 million to a dark money PAC to influence political races between 2014 and 2017. This money was intended to be used to elect the officials, the same ones that the utilities are overseen by. Across the country, the story repeats itself. Utilities use dark money, front groups, LLCs, and national interest groups to secretly advance their agendas to earn higher profits. But why is bribing politicians so profitable for utilities? The reason is that elected officials at the state level ultimately decide what rates the electric utilities are able to charge customers. The regulators and politicians are the ones that set what ROI, or return on investment, the utilities are able to earn on their investments in power generation and distribution lines. However, this creates a perverse incentive for utilities. They are, in a way, incentivized to invest as much as they can, even if the projects aren't really in the benefit of customers. The more the utilities spend, the more they are able to recover from customers through higher electricity rates. With this perverse incentive in mind, it's not a surprise that some utilities decide to bribe politicians. Utilities are able to maximize their profits by ensuring that the elected officials that oversee them approve their large investment plans while also approving high target ROIs on their invested capital. In other words, if the target ROI is set at 10%, which is typical for many utilities, the utility earns a virtually guaranteed profit of 10 cents on each dollar that the utility deploys on power generation and distribution assets. This is a low-risk business investment, earning a healthy return. And it's no surprise that many utilities are growing earnings by 6% for the long foreseeable future while offering industry-leading dividend yields or cash back to investors at 3 to 4%. That kind of performance and long-term visibility in earnings is really hard to come by in the stock market. If you're interested in investing in the broader US utility industry, consider checking out XLU. It's an ETF or an exchange-traded fund that can be traded like a stock to provide you broad exposure to the US utility industry. But how is this performance so sustainable? Shouldn't competition outcompete the high profits for utilities? Ideally, yes, but in reality, no, because utilities run monopolies. Yeah, you heard it right. They are monopolies and are sole operators in their respective service areas. So if a customer disagrees and wants to switch services, good luck, because there isn't any other utility to choose from, unless you want to move to another state. In some cases, customers end up being forced to pay more for electricity, even when utilities make bad investments. And there's little customers can do when the politicians are in the pockets of the large utilities. But utilities can't be all bad, right? No, they aren't all bad. In fact, scandals like the one for First Energy and others have made utilities rethink their outdated strategies. In a world of increasing transparency, it's harder to cover up bribing politicians. A new business model has arisen from the scandals. The new business model for utilities is to provide excellent customer service, low customer bills, and reliable electricity. It's a novel ideal for the utility industry, I know. But how can utilities remain profitable by lowering customer bills while providing a better overall service? The simple answer is smart investing. A few utilities have figured out that they can earn high profits by investing in a way that keeps customer bills low, which in turn makes elected officials happy, because happy customers help officials get reelected, and happy regulators tend to lead to happy utilities. But what projects are these utilities investing in that are so smart? Believe it or not, in many areas in the world, renewable energy is the cheapest form of electricity, and the smart utilities understand this. Florida-based NextEra Energy, ticker NEE, is one of them. They understood the favorable economics of renewable energy early on, and it has been investing heavily into renewable energy over the past 2 decades. The market has rewarded the stock, helping it to outperform its utility peers by more than 3 times over the past 5 years. From a utility perspective, it makes a lot of sense to invest in renewable energy plants too, because as I mentioned earlier, utilities earn a profit on their invested capital. If you consider a solar or a wind power plant, the total investment is into the project itself. But with the coal or gas plant, only a part of the investment goes towards the plant. The rest goes to pay for fuel, an expense on which a utility doesn't earn a profit. And fuel costs are passed on to customers. And with rising commodity and fuel costs driven higher by inflation, this drives customer bills even higher, making the case for renewable energy even more attractive and economical. This smart investing creates a win-win-win situation for customers, regulators, and utilities. NextEra Energy is clearly the leader in the electric utility industry. It's also an interesting stock to consider if you're a stock investor, but there are risks and challenges that NextEra and other utilities face. Utilities are facing hurricanes in the east, wildfires in the west, ice storms, floods, and landslides, causing power shortages for multiple days in some cases.
Aftermath of the pounding storm tonight, 9,000 PG&E customers in the Bay Area still in the dark. We found some on the peninsula who have not had electricity for more than 50 hours, more than 2 days.
The bad news is that climate change is likely to make these natural disasters more frequent and severe. This poses a challenge to utilities because disruptions to the grid and investments to make the grid more resilient are both costly and lead to higher customer bills. The issue that utilities face today is that they could raise customer bills. That could make those customers unhappy and put the utilities at odds with politicians that want to keep customer bills low. And due to recent scandals, increased scrutiny has made it harder for utilities to run their old playbook, which would be to bribe politicians and push higher electricity rates onto customers. This makes natural disasters a key risk to profits for many utilities. And in some cases, natural disasters are completely devastating for utilities. No other utility in history has been hit harder by natural disasters than California's very own Pacific Gas and Electric Company, or PG&E for short. PG&E is likely to be the first company to ever go bankrupt due to climate change. PG&E's power lines caused wildfires in drought-stricken California, amounting to $13.5 billion in damages, leading to its bankruptcy. However, dry conditions and more severe wildfires could mean even more liabilities in the future for California utilities. The unfortunate truth is that customers like me in California will have to pay higher electricity prices, even as grid reliability declines due to frequent wildfires that have further intensified and are likely to get even worse in the future. Surely, there must be other ways to get reliable electricity, right? Well, you know how I told you earlier that you wouldn't be able to replace your utility because of their monopoly status? I was kind of lying. In most cases, you won't be able to fully disconnect completely from the grid of your local utility. However, who said you couldn't generate your own power? The answer is rooftop solar. Many homeowners have already made the switch, not only because it's better for the environment, but because going solar saves you money. Depending on where you're located in the United States, installing rooftop solar on your home could save you up to 50% on your utility bill. And if you're an investor like me, you'll be pleased to know that with the help of certain local and state incentives, you can earn more than a 20% return on a low-risk rooftop solar system. That return is much higher than the projected 5% average yearly return from the US stock market in the long term. Moreover, rooftop solar will become even more valuable in the future as electric vehicles and the broader electrification of the economy further increases demand for electricity. If you're interested in saving money by going solar and securing your future against higher utility bills and the electrification of the economy, check out the rooftop solar marketplace run by EnergySage.com. It is the smartest and easiest way to go solar. Instantly compare quotes online from pre-screened solar professionals to ensure that you get the best deal on your rooftop solar system. Click on the link in the video description now to start saving money. You'll also save an additional $25 when you use the link below. Although utilities are disliked by many for obvious reasons, there's some good ones out there that are increasingly adopting cheap, renewable energy. And ultimately, we do need them as we electrify different sectors of the economy, such as the energy, transportation, and manufacturing sectors. But let me know in the comments below what you think about your local utility. Are they doing a good job, or could they be doing better? And do you think rooftop solar is a good investment? And if you're watching this video right now, thank you for watching until the end. Subscribe now and hit the notification bell to enjoy more of these video essays on all things business, investing, and entrepreneurship. Also, leave a thumbs up if you learned something new throughout this video. It really helps me with the YouTube algorithm, and it helps me to continue making new high quality videos for you. Thank you for listening, and I'll see you at the next one, Wolfpack.